There is a setup that appears almost every single day at 9:30 a.m. Eastern Time. And if you can understand this, this is probably one of the easiest moves in the entire market that you can trade. Personally, I've gotten moved to a Top Step live account trading this setup. As you can see, here's a certificate. So without further ado, let's get right into it and identify how to find this setup. There's really only two things you have to actually understand for this: liquidity sweep and a fair value gap. Once you understand those two things, this setup is going to make complete sense to you. Usually around 9:30, we'll get some massive push to the downside or massive push to the upside. And you kind of see, we kind of chop at first, and then boom, massive push to the downside. And what's actually happening in the moment is the market is running stop losses. Think about every single retail trader that learns from the books, the YouTube videos, right? They're all putting their stop losses underneath trend line, underneath EMAs. So what the price does is run all these stop losses at the same time. It loves running below key levels, breaking that support, but then going back above it all the time. You can literally see it right here, okay? We have a bunch of lows right here stacked up in form of a trend line, and price explodes through it, breaking the trend line, taking out not only trend line breakout traders, but also stopping out people who are buying out the trend line, and then we go up. So this is pure manipulation. When a retail trader is thinking about price, they're like, okay, where can I place my stop loss? Underneath the trend line. And that's what triggers this big candle. And then it just blows all right through them. That is your liquidity sweep, which is the first key thing you need to understand. Now, after that liquidity sweep, you are going to need to pay attention. Okay, this is where you need to identify a fair value gap. You can see on this exploding candle here, we have a fair value gap. It's basically just a little gap that leaves a fair value gap or imbalance behind because this candle moves way too quickly. And the way I identify this is looking at this 3 candle formation, which you can see here. We have this low, does not overlap the third candle's low. So you have a sequence of 3 candles. The low does not overlap this, creating a fair value gap. It would not be a fair value gap if it looked like this. And this is exactly what I'm looking to trade. So as you can see, price comes down here, sweeps all these lows to the left, and we get a pretty bullish reaction. In live time, I don't really know what's going to happen here, but when I see this reaction, I'm thinking, okay, this is a true reversal. Price then inverses the imbalance and closes back above it right here for about an easy 1 to 2 risk reward. I usually put my stop loss as a close under or as like a hard stop loss of the candle that inversed it. So maybe right here, and I target the next obvious high, which could be here or even here. Same thing here. Price opens at 9:30, we explode down, we sweep this low, and we get an inversion right back up to these equal highs, or in other words, a double top, which more people have their stop losses at. This trade right here would be about a 1.5R, which is still pretty good. You don't need a 2R every time. And again, you can spot this in the 30-second, the 1 minute, the 2 minute, and even sometimes the 5 minute, but I think it works best in the 1. Now, let's talk about how you should actually enter the trades. I enter the trades the second the candle closes. So when you go down and then the inverse actually triggers, or we get the close above, this is where I enter. Now, I know it's not a limit order, and I know you're market buying, which is a little more risky, but I usually have the conviction whenever we inverse this to go up. And in this case, yes, we could have retraced down here, but we didn't, okay? And sometimes we do, sometimes we don't, but it's okay because I keep my stop loss under the inversion. You have to be okay with losing money in the trade. I'm not always fully in profit right when I enter, but most times it ends up working out. Usually if the setup is valid, it will move pretty quickly and not chop around. So just remember that. Now, the first thing I do when I enter the trade is I want to go risk-free. I want some sort of point to be a break-even point, okay? And in this trade, I usually look for like the next internal high to go break even, but in this trade, there's actually not an internal high. So subjectively, I'd probably go break even when we hit the high that was formed before the high that's the target, right? And this would be where I'd go risk-free and move my stop loss to make sure I can't lose any money. Generally, I do this about a 1R or the next internal swing high, whichever comes first. And from there, I'm just targeting a very opposite liquidity level, which in this case, it's this double top where you can see we have high here and a high here. So naturally, I know stop losses are going to be up above this. And yeah, that's pretty much the whole setup. Liquidity sweep, inversion fair value gap, find a spot to go break even and make your trade risk-free, and then find a target that's also good liquidity as well. Listen, you don't need 10 different strategies. You also don't need a bunch of indicators clogging up your chart, unless it's my indicator, which probably would have alerted all the trades I talked about in the video. If you just lock in, same time, same structure, 1 trade a day, you can easily start getting payouts, and that's exactly why I got moved to a live account on Top Step. This setup either forms or it doesn't form. You don't really know until you get the trade. And if it doesn't form, that's okay. Go touch grass and move on to tomorrow. And once you do start seeing this, you're going to start noticing it a lot more. What I would recommend, go back testing. Go study it, go find it on your chart yourself, and build an experience around finding the setup. At the end of the day, it's you versus you, and I'm just the one relaying the information. What you do with it is up to you. As always, don't forget to use code DODGY for every single prop firm. And if this video helped you at all, drop a like, comment, subscribe, and let me know what other videos you want to see in the future. Peace.